Hey, good morning. Happy Friday. Last webinar of the year, last official webinar of the year. Maybe I'll surprise you and do an unscheduled one before the end of the year. Who knows? But anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go. So, good morning. Hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client of Traders Way. We appreciate you. We offer you quick execution speed, competitive spreads, world-class customer service. Hey, you want an ECN account, fixed spread account, variable spread account? It's your way at Traders Way with Trader Way. Hey, check that out. Yeah, I bought a new trading PC. It's on its way. Amazing. And I think I'm going to throw that away too, the whole setup. I'm not super happy with it. But I bought this new trading computer. If you go back like 10 years ago, I bought a solid state, liquid cooled computer that ran, I think it was 12 screens or something. And it cost $4,000. I got one 10 times more powerful, and it was a lot less than $4,000. Amazing, like 64 gigs of RAM. Nice. Looking forward to that. Solid state boot up, 2 terabytes. Otherwise. So I'm looking for that and setting it up all 4K. So that's going to arrive in a few days. I'm looking forward to that because this is what I got now. I don't think it's supposed to do that, right? But anyways, good to see you, my friends. Happy New Year, almost. Happy holidays. And if you're new, hey, why not swing by TradersWay.com, become a client today, huh? So what do you want to do, huh? Why do you need all of that in a PC? You're so funny. What does need have to do with it? So I'll put it this way. Like this machine behind me has had memory problems since I've had it, right? Stuff like that. And then my school laptop, it's buried under books. My school laptop, my last trip at Harvard, I'm in class, and it's a brand new laptop. It's not that powerful, but it was a student-based laptop, and it seems like all the laptops only have 8 gigs of memory now, right? So anyways, I'm sitting there in class, and then it rebooted, and then it rebooted, and then it wouldn't connect to the internet, and it started giving me memory problems. I'm like, this is a brand new laptop, and then my trading PC's got memory problems now. So the sticks, I don't know, whatever. So anyways, I'm buying this new one, and I'm just like, I want a lot of memory. So they're like, okay, the biggest one we have is 48 gigs. I'm like, good. I want more than 48 gigs. I'm like, well, I guess we could like pull it all apart, put it all back together, and give you 64. That's what I want. Why? Because I need it? I don't know. I want 100% no failure. So if 48 is ridiculous, give me 64. I learned that from Dubai. If anyone lives in Dubai, right? What's the saying there? If 3 will do, build 10. But whatever, whatever. The thing is, and then also in context to whoever asked me that, why do I need that? Well, it's not need, but compared to what it used to be, it's like practically free. It's like so dirt cheap that like it's my trading rig. Like, why? Mike says, does the Fan make noise? No, I don't. No, it makes no noise. Okay. Um. Yeah. Yeah, John. And like I said, it's there's memory problems and so now when I boot it up, it goes beep 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 because it's got server memory in it, so that tests itself. And for some reason now today when I boot it up, not only do I get memory problems, but now it's throwing off one of my video cards and it's trying to like. So, anyways, that luckily 2 or 3 days ago I ordered a new PC. That's all I'm saying, and good timing. Okay. So, anyways, yeah, the last official webinar for the year. The markets are going to get really different between now and the first. So I'd be careful, right? Yeah, John, it's no wait. Yeah, this is the Z800, John. And before that I had the so you must know servers and stuff, John. I had the other one, like the one down from this previously, and it was supposed to be awesome. And I went through probably a year of problems with it, never quite worked right. So then I'm like, so I bought the bigger one. This one was designed by Porsche Design. Oh, you do, John? Right? This is the Porsche Design. It weighs like 75 pounds. It's so heavy. It's solid steel, and it's beautifully designed, right? And when you look inside, it's gorgeous. It's the nicest looking machine that I've ever had. But it sucks, right? Well, and John says it's temperamental, so John knows his stuff. Well, I can't have temperamental. I need like a Russian tank. So anyway, so I bought it. So now I've gone through two of these they're servers actually. I've gone through these servers, a good one and then the better one, and they still have never worked properly. So anyways, I got rid of all that, and maybe because it's running so many screens, so it's got what how many screens does it run? 20, 24, something like that, but I'm not running them all, obviously. So this new machine doesn't run as many screens, but then I'm going to be running 4K across the board, and so maybe it's better, right? Oh, was it BMW design? I thought it was Porsche design. But one of them, right? So anyways, yeah, John knows the stuff. Man, John the genius. So anyways, I just want it to work. Somebody said, why do I need all that? I just need it to work. And when a trading rig used to cost thousands and thousands and thousands and thousands and thousands of dollars just for the machine, now the stuff is like, doesn't matter, just add some more. What else could you put on this is now the question, because they're so cheap compared to before. You don't ask like how much is it, you ask how much more can you put on it, right? So anyways, yeah, the case is good. It's custom made, but they told me what it was based on. I think it's another HP machine, but I think it's a PC and not a server. I'm sorry, John, I don't remember. But 240 gig solid state just to boot, right? Just to run the OS. 2 terabytes of a fast hard disk, which is, I don't care about the terabytes. It could have been 1. I would have been happy. 64 gigs of the DDR4 RAM. I think it runs 12 screens, maybe less. You know what? It's less. I bet you I got one that runs 8. See, it doesn't matter because I'm going to be running the 4Ks. Right? So I don't need 18 screens anymore. I need, 4 or maybe 6 4Ks. But then that's a whole different, you have to have a whole different setup for that. So anyways, whatever. A lot of you guys are in similar situations where you're thinking about how to build things. So I hope you don't mind the sidetrack on this last trading day. Well, hey, Noah, welcome. Hey, Noah, if you're 16 years old, if you can learn to be patient and disciplined, not only will you become a solid adult that people respect. I don't care what industry you're in, but also if you can learn to be conservative, And if you say to yourself, I want to do this the rest of my life, and you act that way, I think you're going to be, you have such an amazing life in front of you, you don't even understand. There's a lot of people here that are 65 and 70 years old that would dream that they have a shot at being a Forex trader for a whole life. Is pretty amazing. So please don't blow it, all right? Look at this like you're 16 years old and you've just been accepted to Harvard College. When you get to Harvard, don't drink yourself into a stupor. Take advantage of the opportunity that it sets you up for the rest of your life. It's kind of what I'm saying. Is that right, John? John says there. Then why do I have so much problems? I've never had this thing work. Like, then why? Like, if I've spent good money, then what the hell? Yeah, we'll do the yen pairs. Yeah, like Jean-Guy has an amazing work ethic that's, should be like a role model to you, right? So I think if you met Jean-Guy, he would be someone that could be a role model, could inspire you, could be your mentor. And hard work, I think, is what he may tell you. Having the right vision and then working hard. Like, not working hard, like, what's the saying, your washing machine works hard, right? Well, I'm not asking you to be a washing machine, but to have an opportunity like this in front of you and to be smart about it, but also put hard work and tenacity behind your vision, especially when you're young. Like when I was your age, I wanted to change the world. In many ways, I did. Jim is, yes. Also, Jim has tenacity like you wouldn't believe. Peter's like, yeah, 61, too late. I don't think so. Actually, that's actually a pretty serious question. So let me reverse that. Going from someone who's 16 to someone who's 60. Yeah, depends on how you want to like set up your lifestyle, right? There's the day trading route, which I like a lot, actually. I like day trading, especially in sort of a swing fashion, in the sense that, I used to trade on the 1 minute chart. In fact, I traded for 1 year on a 1 minute chart, just every day, just 1 minute, because someone told me you couldn't do it. So I wanted to explore that. So I traded the 1 minute chart every day for a year, and I got really good at it. And therefore scalping became something not just like as a technique, but a technique on how to get into my better trades, because I found like I could make 10 pips with my eyes closed. Even if I was trading in the wrong direction, I could pick up 8 to 10 pips and just. But I found is you never get rich doing it and all that kind of stuff, right? And it's a lot of hard work. You don't want to scalp every day for the rest of your life. So then I started using that as a technique to get into my better trades. And there was a couple of years there where I was showing people how to scalp 100 pips. Okay, and it's sort of it was a marketing ploy to get people to kind of pay attention. I was scalping decent trades, but I would scalp on a 1 minute how to get in. And then people say, well, how do you do that? How do you scalp 100 pips? Like 10 pips is amazing, Wayne. 100 pips is unthinkable. And then I say, well, okay, here's the thing. Here's the long-term trend. Here's the long-term support, which is the key. And you only see it on a 4-hour chart, let's say. Then you drop into a 1 minute chart and you already know you want to buy. And so you get red, and suddenly green, buy, and you're scalping, and the whole market reverses on your pathetic, pissy little 1 minute trade, right? 1 minute chart trade. A pissy little scalp turned into a 100 pip move. And people are like, how do you do that? Oh, I had a trade plan, and I looked at medium to long-term support and resistance. I knew where to scalp. And of course, now you're like, well, then it's not really scalp. Oh, right? But that ends up to, what I'm trying to say is then that led up to or in fact led me back to why I think day trading is so wonderful. Like I've shown you in the past where, you see a move in Asia and it goes all the way to a top of a market, right? And then comes down in sort of New York and then resets the next day, up and up. And I call that the Asian fade and all that kind of stuff, which I've been doing for forever. Been teaching the Asian fade as a day trading strategy forever. Then that leads to then swing trading, right? And then position trading. And once we get decent carries again, then when you can do carry trading. So long story short, I think if I was 60 and wanted this as a not like an all day like 9 to 5 job, but what if it was just like, what can you do to support yourself through retirement that doesn't take over your life and just be another job, right? And that would be a combination of day trading and swing trading, where you work, let's say, an hour a day, but you know what hour, maybe 2 hours, or maybe an hour in the evening. Like if you're in New York, like let's say I retired in Florida, right, and I live in a beach condo in Florida, what would I be trading? I'd trade an hour a day in Asia, and I'd trade an hour a day in New York. So I trade a little bit before I go to bed, a little bit when I wake up in the morning. And that would be my day. And if you pick the right time, that could be your day. And that sounds pretty nice, right? Jimbo says, what's success rate? Well, Jimbo, that's actually, it's a good question, but it's not a good question. The reason for it is it's really irrelevant. So what if you did something like every time you traded, where's my drawing tool? I hope this works out. What if you always did, let's make this easy. Well, hopefully easy. What if every trade you made was sort of a day trade? Meaning you're in your trade for 24 hours or less, okay? And you always used a 33 pip stop. I think that's reasonable, right? For most people for a day trade. Put it this way. If an average daily range for any reasonable currency pair is approximately 100 pips, okay, then you're essentially risking 1/3 of one day. Okay? But you only buy at support, you only sell at resistance. So when you're right, you're right. And when you're wrong, the market reversed. You see what I mean? So you also would have to say to yourself, if you believe the market's ranging, you don't trade at all. But if it's trending, right, you know by definition that if you traded here, it's not likely to go here and knock you out for, another 1/3 retracement. So if it retraced 1/3, and you have another 1/3 retracement before you get into trouble and, whatever. So let's get back to the math. So you're doing a 33.99 basically, a 33.99 OCO. And that would be a day trade. Sometimes it'll take a day and a half or two, but if you get the trend right, you'll do it. And if you get the trend wrong, you got other problems, right? Yeah. Well, that's right, Jimbo, but that's actually relatively easy. Again, a downtrend, this is going to be Asia or London Open. It's not that hard, especially if you give yourself more room. What I prefer is you should do more like a 50-150, okay? Or a swing trader should do 100-300, especially if you have carry behind you, meaning you get paid interest on these, okay? But what I'm trying to say is, let's say you lost 60% of the time. You only win 40% of the time. That's your win ratio, going back to the question Jimbo asked. Okay. The interesting thing is you lose 60% of the time, but you're still profitable. Now, you're not very profitable, but as long as you're above a 66% losing rate, right? If you lose 66% of the time based on this, you break even. Now, the question is, are you better than a 33% win rate? Are you better than losing 66% of the time? And if you lean forward, you're like, wow, gosh, that's easy. Well, then there you go. Right? If half the time you lose money, you're going to be profitable. Okay? And of course, now you get into this giant habit of your worst trades are only 33 pips, which is no big deal, right? And then, of course, along the way, you can move your stop and all that kind of stuff. So you might have half your losses might be 33 pips and 3 pips, right? Because a lot of them you jam at break even. And then all your winners are 99, okay? So if 33% of the time you made 99 pips, which I think you should feel is reasonable, and this adds up, what is the average of this? Right? It's going to be significantly less. So your average winner is going to be way less, right? If 5 trades are -3 and 5 trades are -33, you get it? Your loss drops to, I should be able to calculate this, right? But I'm having problems. So let's say your average loss now is 20 pips. Your average win is 99 pips. You see what I mean? And you're going to be all right. Yeah, okay, yeah. No, they're totally toast, Luis. I explained it earlier that I ordered a new PC. So anyways, Jimbo says, my point was to scalp into a 100 pip win and keep it. Well, no, but, yes and no, because the reason what I guess I didn't clarify my point well enough. Okay, we knew, let's say way up here, that this was support, right? We knew that. And, well, no, sorry, we knew here. Okay, can we agree on that, Jimbo? We looked at monthly pivots, 4-hour and daily chart, whatever. But we looked at the higher time frames, okay? And we said, well, in here is a scalping opportunity. That's the secret to the scalp. Well, Kyle says, assuming that you can be disciplined enough to not move the stop. Well, yeah, but that's where I'm trying to get you, right, Kyle? That's what you're supposed to be practicing. Oh, you mean that only thing for a living? Oh, well, no, one thing? No, you can't be a one-hit wonder. You won't get enough trades, right? But all I'm saying is the part of knowing how to scalp is knowing, like, this is resistance, for example, okay? And you have a scalp and a small winner, scalp and a bigger winner, scalp and a small winner, scalp and a huge winner. Okay, first of all, you're scalping in the right direction. And second of all, you're scalping at the right price, because all of this is pretty obvious, right? And eventually one of these really, you get lucky and you get a huge payday. Why do you get lucky? You're scalping in the direction of the prevailing trend, which is, again, something I've been trying to teach forever. But then also, to add to that, we also know that this area down here, even though there's no price action, we know this is support as well. So you can now look for this kind of stuff. And then, of course, we know that this is a hammock. So we know we got this going on. So you could enter this as a scalp. And this is really what I'm getting to. So let me zoom in even more. The way you would astonish somebody watching you trade, because amateurs only see that it's fallen for weeks, right? But a professional knows that this is where you would look for a reversal. Then this is the confirmation of the reversal. So this is where the hammock trade, the 1, 2, 3 trade goes, right? So this is where you can show everyone how amazing you are at scalping. So you're not on a 1 hour chart, but on a 1 minute chart. You catch something like this and you're in it for a while, okay? And that's your counter trend trade, okay? But, you know, there's a lot going on. The thing is, a lot of people don't see this. They don't know this is a reversal area. I mean, this could have been a scalp in of itself. And this is the follow-on scalp based on, you know, this, you know, right? What's a 1, 2, 3? 1 is a double bottom, which is here. 2 is the higher high, right? All basic stuff, right? There's the higher high, higher than this high. And then 3 is the higher low, right? This is classic stuff that I've taught 100 billion trillion times. So this is actually the actual good entry, but you could do that on a scalp. But it, you know, and then you know, and then people are like, "Wow, you reverse the whole market on your 1 minute chart." Well, they're amazed because they didn't see any of this going on your, you know, last week. Does that make sense? But other people, see, when you don't know how to qualify your setups, you end up getting into that situation where, you know, you see these guys saying that they're earning enough money to buy yellow Lamborghinis, and then you see they're trading 1 minute charts with like dumb indicators, and they're not doing much of anything intellectual in their trading. And I think my stuff's simple, right? And it's just a fallacy because it can't be done, not properly. That's not how you properly trade. When you drop into a 1 minute chart, it's because you've planned your trade. This is all based on what happened last week, and this is where you attack, okay? You can't just walk randomly through the jungle looking for bad guys and start shooting when you happen to bump into them. How could you possibly win a war? What's a zero-sum game? You get killed or you kill the bad guy. The bad guy kills you or you kill the bad guy. You have to have plans. You have to have strategy. You have to be there in advance, setting up an ambush so you have an unfair advantage. Someone walking along with their 1 minute chart sees you do this and like, holy smokes. And you're like, dude, you had a week to set this up. An entire 1, 2, 3 hammock setup, right? So that's what I'm trying to get you to. Focus on the sort of the reality of it, right? Yeah, well, Ross, I bet you when they say it's time for you to go on patrol, you're like, what? No. Right? It's not my turn. Right? Not my turn. I have a real bad feeling about this one, Sarge. Yeah, well, I suppose, Ross, that was the problem with Iraq, right? So I don't mean to criticize because I wasn't there. But wouldn't you rather, just a military strategy, I don't care if we're talking about the Revolutionary War in the United States, but wouldn't you rather say, well, this is the path, here's the Ho Chi Minh Trail, and we know bad guys walk along the Ho Chi Minh Trail a lot, assuming you're American, right? I don't mean to upset any Vietnamese. All right. And you say, well, why don't we get here early? So we're going to like hang out here. And we believe the bad guy, the North Vietnamese army. How about that? I'll say it that way. We believe the North Vietnamese army is going to be moving this way. All right. So great. So we'll get there early. And, well, I'm going to set up a machine gun nest here and a machine gun nest here. And then I'm going to set up my troops here, 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 and one here and one here, maybe two here, just in case they flank. Okay, great. And then we're going to set up booby traps here and 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 here, and here, and here, and here, and here, and here. Now, the machine gun nest is actually a high point, and this is also a high point. Okay? And this whole area is a higher point. So these guys are sort of down in a little valley everywhere. Okay? And anyway, so the North Vietnamese are like, hey, let's move some ammunition this way. And look what they run into. Boom, 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 boom. Right? Oops. Does it come back? I lost it. Too bad. And I was going to draw the little explosions. So they jump into the ditch to hide from the crossfire, and they jump into the landmines and the booby traps. You know, and then you're like, that's it. The firing stops. Cease fire, right? And then you pack your shit up and go back to base and get drunk. That's how it's supposed to work. Yeah. So anyways, that's all I'm trying to say, guys. In fact, how did I open the very first paragraph of my book? I talk about a general wins because many plans were made. It doesn't say be a hero, right? It says plan more than the other side. And that's out of the Art of War. Did I serve in the military? I joined the United States military as a Canadian. I joined the Navy because I was on my way to becoming an astronaut, and I need to serve in the military to get flight experience. So I was interviewed interviewed by every branch of the military, even the Coast Guard. I interviewed with everybody, and I did all the tests. So I did the written test and everything, and scored enough to be like top one qualified or whatnot. And finally, the Navy offered me the best deal because they know exactly how many hours you need to get to fly for Delta or something, right? So they tweaked it, and they're like, well, you're going to have to do at least 8 years with us, but you'll have more than enough hours. Well, I wasn't necessarily going directly to Delta to fly for them. I want to fly for NASA. So anyways, I had worked at NASA for a couple of years, as you guys know, and then I was preparing, so I took a class on aviation, and I was taking the math tests and everything. And finally, the Navy offered me the best thing. And by offer, I mean, these guys were picking me up chauffeur-driven stuff to meetings, and they bought me dinner and put me up in hotels. And I mean, I was ready, okay? And finally, the Navy gave me an offer I couldn't refuse. We'll let you fly anything you want. You got to be in for 8 years, though, and all that kind of stuff. And you'll come out first lieutenant. We'll pay for college, right? And I'm like, great, I'm in. So I signed the documents and everything. I joined the United States military as a Canadian, right? And went through your first day of being in the military. Is called MEPS. It's a medical, some sort of testing, right? So that's where you strip down to your underwear, and they give you a chart. And you go with a group of, 10 other guys. And they say, follow the green line on the floor. So you follow the green line, and you go to a room, and there's something in there, and the doctor's there, and he's like, look into this microscope. What do you see? I see the number 15. Great. Look again. 22. Great. You look at that about 6 times, and they're like, okay, and then you write something on your chart, green line, and you go to the next one, and they test your sound, and then the next one, and you go, they even had me bend over, spread my cheeks. Why? I don't know. So anyways, I went through all of that, and then I'm following the green line, and you get to a room, and the guy in a lab coat and rubber gloves, I'm like, oh no. He said, pee in this cup. So you go in the corner, you pee in the cup, you give him the cup. And then he does a quick test, and he writes something on my chart. And he says, see that bench? Yes, sir. Take a seat, son. So take a seat. I sit there for like 90 minutes. I don't know what else is going on. Then he says, come here, pee in the cup. All right, so I try my best, and I do a pee, P in the cup, test it again, write something on my board, red line. And it takes me to a counselor. Yeah, no joke. And I said, does that mean I'm not going to get to fly airplanes? He said, son, I wouldn't give you a rifle, yet alone a $300 million airplane. So they gave me a subway token to find my way home. And that's how I left the military. So yes, I was in the military for maybe less than 24 hours. Okay. Cash says, Wayne, you were expecting yen pairs to weaken. No, after Christmas. No, strengthen. Well, okay, depends on what you mean. Yen pairs would come down. Okay. Yen pairs, that's seasonality. So again, it's not me. I'm not making like a prediction. In fact, well, they've already come down all month, right? So I've been wrong in the sense that they moved early. Okay. Yeah, Ross, well, yeah, well, David Pegler's got some stories about that as well. So, all right, so yen pairs. So, in August, okay, let's go all the way back to August. In August, I predicted that yen pairs would go up, okay? And then I said, sometimes it starts as early as Thanksgiving. Generally, it starts in the middle of December. But definitely by January 1st, we will be selling yen pairs, not buying. But in August, early August, I'm talking about we are preparing to buy yen pairs. They're going to go up until Thanksgiving, probably to December. Can anybody confirm that, or am I just making something up to sound good or something? How many people have traded with me for 10 years or more and have heard the same thing over and over and over again? I don't want to tweak. I feel confident until Thanksgiving. It generally goes more, but I've seen all the yen pairs come down in the middle of Thanksgiving. I've told you stories about how it was devastating to me, where I had so many trades open and I was giving them back, but I didn't know if I should get in or out or not. But okay. 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 So usually it goes beyond Thanksgiving, but that's sort of the turning point for me. 2 years ago, I was reminded now, 2 years ago, it happened in the middle of December. Last year, actually, I can't remember if it was middle of December. This year, you know what? It may have been Thanksgiving. Let's just pick Aussie yen. When did it come down? So that looks like a top, huh? Does it go farther back? Let's see. Yeah, that's the top. All right, so the top in the market was here. That's the top. All right. December 3rd. That's a couple weeks early. Okay? And I explained here that if this drops, okay, how many people remember this? I said if this drops, it's probably going to drop until March. Like it's significant. Once again, I didn't want it to. Okay, so I'm trying to put humility in here. I didn't want it to, but I knew that that would be it, because that's where bears would sell. Okay, So, yeah, okay. It's one of these things like, and I want to take you back to this sort of mentally, if you guys will. At this point here, this whole box that I'm talking about, this is the last line for bulls to stay bulls. And I believe we talked about that. And I talked about how unconvinced I was, unsure I was, but nonetheless, it is the place to buy. It was the weekly target low. It was the swing long. It is support. It's everything a bull needs, except this wasn't supposed to happen, right? But I was hoping it would do like come back up into here and then fall, okay? So I hope this, you're putting yourself into this situation where the fact it's falling isn't that surprising. I was hoping it would rise up to here and then more like January we're selling like that price. But we knew if it was going to fall early, it would be here for the same reasons, really, just the opposite. But it's the same trade. The only difference is bias. It's the same trade for bears as this is long for bulls, except the bears have this behind them, okay? And I don't know. So again, I'm trying to give you a long-term perspective. Next year, you're going to need to make very, very similar decisions. And there's going to be similar uncertainties at the time. So like a bear, let's say a bear would be certain here. And they're thinking they're geniuses now, right? Like, I just knew. How could Wayne miss that? Yeah, okay. Yeah, the difference is bias because you have to filter. Okay? In the long run, it's better. If I had bought here and made a higher high, then I could say, aha, I'm the genius, right? I knew it, and then it'd come down. But ultimately, if you want to look at your trading properly, when you're right, you get paid. When you're wrong, you should basically break even or whatever, take small losses. But the difference between winning and failing is only what the market give or the market taketh away. If you are a bull, for whatever reason, on whatever time frame, okay, this is bullish, and this is support. Okay, price action support, this is market support, this is market support. Okay, you understand? So it's just like your job to buy it. And this time it didn't work. Yeah, well, you were a genius here when it worked, okay? But it's not genius. You're just buying at support. And that's that. And then, of course, bears did basically the opposite, right? And that's a pretty simple bearish setup here. This is a very simple bearish swing low. Not complicated in the slightest. And then, of course, this was a lower low scenario. So for a bear, it was, again, not rocket science. You don't have to be a rocket surgeon for that, right? So it just, that worked out. And it makes sense in December, but you didn't know it here, okay? It was essentially 50-50 either way, I guess. But it was actually a little more, it was significantly more bearish than bullish because really what I wanted as a bull back into here, if you remember our old trade plans, was something more like this. And then have it drop in January. Like the drop is not surprising. The timing I got wrong. But wrong in the sense like 6 months ago, I said somewhere between here and here, it would turn bearish. I didn't think it'd be the first of the month. I thought it would be 15th or 30th. So, can this still be a learning experience? How will you behave next year? Will you go on alert in Thanksgiving? Should you go on alert December? Like, That to me is the more important question. Looking at what you'll do next year and next year and next year and next year. And I try to be as honest as I possibly can in here. And I remember thinking this was great. This was a great trade plan. Then we were down here and I was explaining to you how significant the timing of this was and how unsure I became. Even though, like, how about this? Let's reverse this. How confident was I in bullishness, even though this didn't quite move well? So here's the third week of August. All right, so in this period here, well, I shouldn't do it this way. In this period, let me do it this way. This period here, how certain was I in bullishness? Certain meaning like how clear, how focused, how stubborn even was I as a bull from this day forward. Not this day, not this day, not this day. Starting here, and of course the answer is 100%. Absolutely, no doubt, not looking at all, ever, even to discussing bearishness, right? Now, this was a bummer. That's a bummer, right? Because I know a lot of people did very well in here. Well, of course you did well. I spent 6 months preparing you. Gee whiz. Okay? Then this significant drop back was a learning experience for some people. Because I think their strategy was, which wasn't the wrong strategy, was to hold the trade till the end of the year. Well, actually, it may have worked if they had done it, but I bet you they didn't. Okay, and then what did it do? Well, it went back up again, did the beautiful retracement, straight off the roll reversal. So basically, there's your double bottom, there's your higher high, there's your 1, 2, 3. So all of this is beautiful trading. This just was disappointing, right? And then we hit December 1st, and we knew somewhere around here it was going to roll over. Okay, did I know it was going to do this versus this? No. And son of a biatch, right? So this was a tougher year. But it was still tradable. Does that make sense? So I'm not concerned what happened with this year per se. I'm trying to drill this home where you're going to need to make the same decision next year and the year after 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 and the year after. And I'm going to behave very similar because I need to stay consistent, right? Like the market's inconsistent. So I need to be the one that's consistent. Okay? Well, Jimbo, the rally is going to be in the third week of January. Okay? But by let's say non-farm payrolls in February, it'll drop again. Okay? But nonetheless, guys, you're going to be in similar situations. I'm going to behave very similar. About this time next year, I'm going to be thinking this. And what I'm hoping for in October is more like this, not this. I don't want any of that, okay? And then I want to, and then I want this in middle of December, not the 1st of December, okay? And on the years it works, they're going to be better years, okay? And when they don't, they'll be mediocre years. But aren't you building a 15 or 20 year track record? Okay. And then also, if you did suffer this and gave all your profits back, what would you do differently next year? If that wasn't the right decision, then what would the right decision be, and what did you learn from it? When could you have known that this was more than a retracement, but a significant reversal? Okay? This is how you learn how to trade, guys. Asking questions like that, analyzing your charts. Okay? And asking yourself these deeper questions. And you'll notice that you don't need a moving average crossover to tell you these things and stuff. Right? Trailing stops. I'm not a fan of that, Cedric. I'd rather you just make a decision. But look, like for example, Cedric, if you need that type of thing, because here's what you're doing, Cedric. You're like, I'm going to have a 50 pips trailing stop loss, which means no matter what happens, I'm not going to make any risk decisions. And I'm willing to throw away 50 pips because I'm not willing to make the decision. Well, I would rather you do something different than that. So why don't you at least use like PSAR or something, right? So where's PSAR on this? Lines, channels, Fibonacci, shade arrows, and channels, lines, PSAR. Is it here? PSAR. Trend, maybe. Yeah, okay. Parabolic stop and reverse. And fat. Yeah, that's fat. All right. Okay. That's your stop loss. I'd rather you use that, okay? And the reason it's different to whoever asked the question, I've already forgotten. Sorry about that. To whoever asked, I think it was Cedric. Instead of using a trailing stop, which just is some arbitrary moving stop, parabolic stop and reverse instead uses volatility to give you a guide where your stop loss should be. So the way it works is when the market is moving quickly, so you get big candles down, 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 it barely moves your stop at all. And it's letting the market run. Okay, so you can see in this here, big candles, and this is where your stop losses should be. And even though the candle goes from here to here, look at the stop loss. It essentially hasn't moved at all. Okay, then we go through a long consolidation period, and you see how it sucks the stop loss in really quickly? See how we got to here all of a sudden? And when we started consolidation, we were way down here. Suddenly it sucks the stop in. And at some point, when you see the flip, the stop's up here, it's taking you out. Well, why did it take you out? Well, you hit the target. So you should be smart enough to do that. Why did it consolidate here? Well, you hit the target. So once again, you can be smarter than this. You should be able to just do your job if you know how to trade technically. Okay? You see how fast it's sucking the trade down, the stop loss down? See how hardly anything happens? But price is dropping fast. And then as soon as we enter consolidation, it sucks the stop in really quickly, okay? And when it flips, you get out. And the way it flips is price comes back and touches the PSAR. So that's why it assumes now you've gone long. Don't go long and short based on PSAR. But if you shorted here on a counter trend trade, okay, you would move your stop here. And the next candle, you'd move it a little bit more. Next candle, you'd move it a little bit more. Next candle, you'd move it a little more. Or I'm sure you can find an EA that would just move your stop based on PSAR. But anyways, right? And that's how you would use that. And so your stop isn't some arbitrary number of pips that you have to throw away because you're not managing your risk. Instead, you're managing your risk using volatility. When volatility is high, you let your winners run. When volatility is low, you lock in your profits as soon as possible. Notice that you never risk more than your PSAR. Does that make sense? Well, Luis says that he's thinking about taking the rest of the month off. Well, there's a reason why this is our official last webinar for the year, is because on Monday, you're going to have a lot less market participants. And you might also have some desperate traders trying to move things during thin markets so that they can hit targets and hit whatever. So we're not going to have normal markets. And when you don't have normal markets, right, you have uncertainty. And uncertainty is risk, and risk is bad. Oh, Jimbo, you're using a 1 bar. So, Jimbo, if you're, let me zoom in here. So, if this makes a higher high than, if this closes higher than this high, you're out. Like if it closes up here, you're out. If this bar closes higher than that bar, well, Freddie says the PSAR is working too fast. Well, you can see this is on a 4 hour, and yeah, it's taking you out, you know, basically around an 8 SMA, right? Yeah, that is fast. But what you might do is you might enter on a 15-minute chart and then use your PSAR on a different time frame. So like you might use a daily PSAR. But now your daily PSAR is way the heck up here, right? So do you want to have a 500 pip stop? No. But what if you entered your trade, let's say earlier, somewhere here, I guess. But see, here's my problem. Once you know how to trade, it ends up not being good. And a lot of these tools. So like what you're supposed to be doing is managing your risk. But what if you can't manage your risk? Well, then you use PSAR to help you. But I see things on here that are so much more important, like this, for example, is where you were supposed to take profit. Now, when you see a PSAR drop below, PSAR is even telling you to take profit here. Okay? Now, by the way, if you were scalping, this is a scalp short right here. If I was trading a 1 minute chart, pachow, I'd scalp short. Once again, easy, right? But look at these moving, these pivot points. This was respected, this was respected, this was respected, this was respected, right? There's like leading indicators going on here, not lagging indicators. And there's so much more important, like, what is it, 20? Is it the 20th now? 21st. So 21 days ago, we knew that if you were short on this trade, that's the price you would take profit. Like, who gives a shoot about PSAR? Moving, trailing stop losses and bar closes. Like, dude, we knew 21 days ago that if you didn't take profit at this price, if you were short, you're a fool. A fool. And that's where I want to get you, that you're like, PSAR, okay, yeah, it's helpful, and you can use it to measure volatility, and it's a nice little guide to make suggestions where you should take profit. But like, if you're using it on this 4 hour chart, which ain't a bad thing, which is actually simulating Jimbo's bar close, it's saying if price comes up and touch this price, 79.25 is where your stop is, right? That sounds really nice and all, except you should have got out down here 4 hours ago, bro. Yeah, so Flank says it's shite. Well, it can be. I wouldn't say it's shite. I'm saying it's okay for training wheels. And it's actually quite useful for you to learn, like, when to know things may have changed. Maybe in a context of a bigger move or swing trading or something, right? Like if you had planned to be, let's say if you plan on being short Aussie yen for like literally 6 months, right? Literally 6 months, then this might be a guide, right? Let's say you entered your trade on December 1st, 2018. This is where you shorted, okay? This is where your stop should be, right? and it leaves it there almost for an entire week. Okay, then there's a retracement. It moves it down to here now. Okay, now we're down here, and your stop is here. You have profit locked in. Okay. Wow, look at that orange, the gray line. Actually, I drew that, didn't I? Holy smokes! So, anyways, so your stop is here. Your stop's at 82. You shorted at basically 80, almost 84. So you have 200 pips profit. Your stop is 1,000,000 miles away, 400 pips away. So your choice now is, should you just take profit at the MS2? Well, one of the rules I have is you always, 100% of the time, take profit at MS2 and MR2, right? I only have probably 5 hard and fast rules. That's one of them. But let's say you'd say, well, Wayne, I'm superseding that. I plan, aka plan being the key word here, I plan on being short Aussie yen until the June Fed meeting, let's say. That might be too far. The March, okay, how about this? Till the March Fed meeting. Then yeah, you would leave your stop here, and maybe this falls a little further. Then there's a false rally. Remember the false rally, 3rd week of January? We're up here, and then you short again. Meanwhile, if it's rising up, it's just slowly moving your stop, right? Just slowly, like it did here. And then if you get that right and it falls until March, you get paid, and maybe the March MS2 is where you're looking to take profit. I don't know, but that's how you deal with that. Like, are you trading a daily chart here? Are you trading a 4-hour? Is it a 1-hour? Like, these are all different types of trades, and they require different decisions. Now, if I were me, what would I recommend to you? Even if you plan on being short this until the end of Japanese repatriation flows, which gets you basically to May, I would still take profit here, and I would still sell up in here. And I would just skip the pullback if I were me. And I learned this. I remember learning this. And it's not always the right thing. I'm just telling you what I would do if I were me. I learned this many years ago when I was trying to figure out how to trade Forex. Because remember, there were no mentors, there were no books, there were no videos. I learned MACD from Gerald Appel. It was an audio recording and a Xerox copy of a workshop he did in the 1980s. So when I learned how to trade Forex, it was audio, not even video. There wasn't even DVDs, okay? So I learned the hard way, and I hated these pullbacks. Whether it was daily pullbacks, 4-hour, even these 15-minute, like you make money for 3 hours, and then for 2.5 hours it retraces. Oh my God, I remember just upset stomachs. I hated retracements, hate retracements. But it made me really good at doing things like waiting for the retracement and selling high. Because I used to do, like, it would fall, it would come up, and I'd sell quickly. And then I'd go through this for hours and hours and hours and hours and hours and hours and hours. And then finally I'd make money. And I always felt like I'd get to here, and what would I do? I'm back at break even. I'm back at break even. I should get out of break even. I'd get out of break even and then leave my winner, right? And so I hated pullbacks. I hated them more than you can imagine. Like, I'm getting all worked up now. I hated pullbacks, especially if I wasn't making money. But if I was making money and then I had to wait, I'd have to lose 50 pips in floating profit only for it to finally take off again. I just absolutely hated it. So I taught myself a survival skill that may only be appropriate for Wayne McDonald. It's just how I survived these years. I'd much rather take the profit here and be out of the trade and then look to get in plan A, plan B. And if it leaves without me, then so be it. Whatever. Okay? Does that make sense? What time is it? 8:49, 8:39. Okay? Yeah, Alfredi, tip of the day, pivot is queen, weekly pivot. Yeah, I suppose weekly pivot, daily pivot. But it depends on what you mean. Like, I don't care that much. Oh, by the way, thank you for subscribing. Who subscribed? Oh, I can't read your name anyways. Well, thank you for subscribing. I don't care that much about the central pivot. And one of the reasons for it, I mean, obviously it comes into play, but it's not my first go-to move. The reason for it is it's typically important, or it can be important to both bulls and bears, right? So to me, I'll agree with the trend is ace kind of thing, because if it's a fast-moving trend, I'll take it here and then sell it here. Not because of the daily pivot, but because it's the beginning of a range. But I would rather look at things like previous support, okay, and say this area here is where I want to sell. I'd actually rather have it come up a little higher, depending on the situation, of course, okay? Now, you'll notice that in this situation, we opened out a position, right? What's the rule for opening out a position? Two things. One, if you slam into resistance, it's going to fail. And two, you want it to come back and buy at the 4 hour, if that's a daily, at the 4 hour. Okay? So one of the real clues here was this failed, okay? And I remember wanting to buy this because I would buy this all day long. And this is the projected top for the month. You can just barely see it, okay? Just barely see it. But we knew that that's the end of December, and son of a, it just happened 2 weeks earlier than normal. But I would still do this again next year if it set up. I mean, there's no way at this moment to say it's going to go from a higher high to a lower low to a lower high. This was pretty, like, it was, I knew it was very much possible, if not even likely. But as a bull, you still can't throw that away. So it's just, you know, happens, man. If it had not made the higher high, I might have treated it differently, but there's so many clues still. Like the fact that it started out of position is not a bullish thing. You have to remember, in a bullish move, the best setup is not when you open high. The best are these beautiful lows. That's what a bull wants to see, is the pullbacks. You don't want to like start a new day here. Because what it'll do is it'll go too far. It's too far. There's no pullback. So the next time it hits resistance, everyone's coming out and nobody's getting back in. So out of position is a bad thing, because whoever entered here essentially achieved all their goals. They're done. Like, we just missed the monthly target, like, and they bailed and they took the rest of the month off. Son of a, right? So anyways, I hope it was a learning experience. I wish it went up one more time. There you go. That's how it happened. It's unfortunate, but that's how it happened. Thank you, Nathan. Thank you, Ray. Thank you for subscribing, guys. Yeah, Jimbo. I suppose it doesn't matter anymore, this situation. Okay. I'm thinking more like this move in the stock market is really healthy. We kind of talked about this in the past, where the Fed artificially lowering interest rates, and then even before doing quantitative easing to extraordinary levels. The outcome of that is overinflated prices. Now, any idiot could have made money in the stock market since quantitative easing because it's designed to push everything up. So there's a lot of dumb money in the market, guys. Lots. And there's a lot of dumb wealth managers and asset managers all across the country managing grandmother's pearls. They think they're genius. They're doing overly complicated investments where simply you could have bought the S&P 500 index and paid 0.000125 in costs versus paying some wealth manager 1% of your net worth, because all he did was index you one way or the other. I think you'll find that over the last couple of years, people with wealth managers didn't even make money because they charged so much and they didn't add any alpha. So there's a lot of dumb money that looks really good because they were dumb, but they showed their clients, look, we're up 20% this year. Look, we're up 30% this year. Look, we're up 12% this year. But no, the S&P 500 is up. So there's a lot of dumb money managing, or dumb people managing dumb money, meaning they're just people's 401k. They don't know anything about investing. They don't know anything about the stock market. They're just like, oh, I'm going to hire some money manager at some big firm because he must be smart. And you find out they're not smart at all. They're not even business majors. They're not even economic majors. They're failed real estate investors or brokers that then became wealth managers. So now they're there managing poor people's money. But if you have a couple $100 million, suddenly you feel like a genius. So now I'm telling you, there's 1 million people managing $100 million or more in America that have no idea what's going on. So they've been doing a lot of things like buying Apple stock and Facebook stock because that's what everybody does. And they feel really good because they've been making money. Really what's happened was the Fed manipulated the market and made all asset prices go up. So what's been happening since about 2008, 2009 is a rising tide raises all ships. But what we're finding out is a lot of these ships are leaking. Kind of. It's an analogy. Now is the time to get out of stock indices and actually hire someone like a hedge fund manager that knows what the heck they're doing, that can actually pick winners, right? Have you ever heard these? I don't know if you live in the United States, but it drives me nuts. I hear these ads on TV. I hear them on the radio. I read them in like Barron's magazines. Like, why would you pick an individual stock when you can own the whole sector? Well, that is the dumbest thing I've ever heard. Why would you buy the whole sector? Isn't somebody supposed to look at the whole sector, analyze it, pick out the 2 or 3 winners that have been dominating the market and are likely to remain dominant for the next 10 years? But isn't there a couple of newcomers that are improving their efficiency, maybe consolidating with other ones, and they're coming up and they're smaller, but because of the percentage, the growth, they're going to have a higher percentage. So these guys are going to produce 8%, no doubt, but these guys are going to produce 25%. And all these other ones, get rid of them. They're losers. They're dogs with fleas. But why would you buy them all? Just do the work. And then the worst, pay some guy 1% or 1.5% of your net worth. So then he goes and buys you a sector ETF. Oh my God, what a dumb thing. But the market is flooded with all these dumb people managing money for people that really don't know. They're not dumb. It's just dumb money. But dumb people managing this money. So now all these people are going to get slaughtered. You understand? They're going to get slaughtered because they're the weak and the sick. And that's what happens in the wild. The weak and the sick and the decrepit, they get eaten by wolves. The question is, are you the sick and weak caribou or are you a hunter? I say we're the hunter. So okay, these things are coming. We'll take advantage. Look, your job is to stay calm, stay focused, make money. Oh man, well, the whole stock market was down 10%. F you, where's my money? That's what your clients are going to say. Okay, so you got to stay sharper than all that. Don't get freaked out like it's the end of the world and the stock market's crashing and everything is going to crash and you hear all this doom and gloom. By the way, it's easy to market. That's really easy to market. The end of the world's coming, all this kind of stuff. People love that stuff. What you should do is say, okay, this is a confirmation. Seasonality went early. Great. Now you got to stay sharp. Pick your lines. Are you a bear now on these yens? Great. Where's the next shot? Where's the next strategy? When's the next bounce? When's the next Fed meeting? What does the economics tell you, guys? Really? Are companies really struggling for profitability? Is that what we're worried about? Are interest rates too high? Like, I hear all kinds of nonsense. Someone said the other day, like, the real estate market is going to fail because interest rates are too high. Dude, interest rates are, like, unbelievably low. Like, what are you talking about? Like, the stuff they say is retarded. I heard today the dollar's weak because of risk off. Like, what the heck are you talking about? It would be strong if it was risk off. People are just like, they say things. The dollar's down. Well, why is the dollar down? Oh, well, I guess because the stock market's crashing. Dude, that makes no sense. Yes, the stock market's crashing, but the dollar's not weak. Someone needs to say, well, why is the dollar weak if the stock market's crashing? Because it's American investors cashing out of their stock market positions for whatever reason. Maybe they're just trying to book some profit. But it's not the end of the world. Foreigners are not flooding to America to buy the US dollar. You see what I mean? Like, got to be careful. Oil coming down is a problem because it's going to kill inflation. Well, but that means interest rates are going to stay low. So doesn't that mean once the stock market sort of finds the right price, because what I was trying to say is way up here is the wrong price. That was the Fed manipulation. We hit neutral, guys. There is no Fed manipulation anymore. So maybe this is overvalued. So it'll come down. It's capitalism, guys. It's going to find its proper value. And then we'll go on doing what we're supposed to be doing. And we'll find out we'll be in an area where interest rates are going to stay low for a very, very, very long time. Time to buy some real estate. Yeah, don't worry about quadruple witching. That's not what's the big deal. So, Cash, I used to be fascinated by quadruple witching, and I paid a fair amount of attention to it over the course of a couple of years. And then it's more important to futures traders. So when I was on the trading floor of the S&P 500, not working, I visited the trading floor of the Chicago Board of Trade. That's where you walk into the first big room and you walk into soybeans and soybean meal and stuff. You look around and you're like, wow, this is crazy. And then you go to the left and you go into an even bigger room. And in the left side of the bigger room, on the left side, you have the S&P 500. You have the S&P 500 options pit. And then you move a little towards the center of the room. And then on your left, you have the 10-year T-note. So anyways, I was in the 10-year T-note pit. And we're like looking at the orders flashing and all that kind of stuff. And it was really good. I was asking all these questions about how he actually trades. And then we got into his methodology. There's only 4 weeks out of the year that he actually trades. The other stuff, he's just pissing around, wasting time, scalping, and picking up pennies and stuff. But his real business, he works 4 weeks out of the year. At the end of every quarter, on quadruple witching, or let's say just in front of quadruple witching, and probably just after quadruple witching. So 4 times a year, he works 2 weeks. Okay? And it's the rollover from one contract expiring, well, right? And it's expiring, but you want to stay in the 10-year T-note or whatever you're invested in. You want to stay with the 10-year T-note, right? So your contract's expiring. So you tell your broker, well, just roll it over because the back month is going to become the front month at the end of today. So you get out of the current front month, you buy the back month because it's going to be the front month, and you just want to stay in the 10-year T-note. Well, therefore, you know people are going to be selling the front month, the current front month, and buying the back month. Does that make sense? No, Ricardo, actually, I've never met him at all. I know he's a good speaker, but I don't know him at all. Okay, guys, can you imagine this? You know people will be selling one contract, and you know they're going to be buying the other one. So that's all he did. And he's traded probably 25 years as a member of the Chicago Board of Trade. And that's all he did. 8 out of 52 weeks, he worked like a dirty dog. And the rest of the time, he had hardly anything to do. And the interesting thing about the 10-year T-note, or the 10-year T-note pit, guys, the Treasury trading pit, is it's like hanging out at the Starbucks with your laptop and a headset on. It's quiet. There's people all around that trade the notes, trade the treasuries, but it's not an open outcry system. They're sitting at their laptops in a trading pit, and they have little desks. They're really small. I think you stand. They're really small. They're smaller than a cubicle. Let's say you have as much space as like a phone booth, but it's open, and you have a desk, and you got pictures of your kids and everything, so it's your desk. And you have your trading, and you see the orders and stuff, and you're like, okay, I think I want to buy now. You buy. Well, the guy like just 20 feet from you, he's at his desk, and he's like, yeah, I think I'm going to sell. But most of the orders are actually online, right? But they don't talk. They don't look at each other. They're not screaming and yelling. It's super quiet. But right next to it is a 10-year T-note, the S&P 500 pit, and they're freaking out and yelling and screaming and everything. And they're right there, and you can hear them, but the Treasury pit is quiet. Absolutely quiet. Oh, yeah. All right. Well, that's cool. Jimbo says, do you trade each of those contracts separately? Well, that's called, just look that up, trading the spread and rollover of contracts. Okay, so like oil rolls over monthly, wheat might do every 3 months, that kind of stuff. They roll over at different times, and therefore there's going to be, different sort of, I suppose, strategies or certainly timing. But quadruple witching is whatever can expire. So whether it's an option or whether it's a futures contract, is it a monthly futures contract? Is it a quarterly futures contracts? Like they all expire at different times, right? Well, if it can expire, any type of futures contract, any type of option, they're all going to expire today. So if it can expire, it will expire. Okay? So that can theoretically create some volatility and all that kind of stuff, right? Meanwhile, stay calm and buy the end, right? Euro getting crushed. On this, you see this, like you see how we're basically at the last trading day of the month, right? I mean, you can trade next week if you want and stuff. And maybe we'll meet before the end of the year. I'm just saying, if you're a subscriber, you'll be alerted. But these are key levels, guys. This tells me stop selling. This tells me we're almost about to stop selling. This tells me stop selling. So now, what are you going to trade? You're trying to catch some of these moves down. Right? Like that was a sell, maybe, all that kind of stuff. But there's not the low-hanging fruit has already been picked, and the other stuff might be rotten apples. Yeah, Ricardo, we do cover a commitment of traders report. I haven't done it in a long time. But yeah, we do cover it, and it's important. Sort of different times of year, different reasoning. I should probably do it again sometime soon. So maybe in the new year we can look at it. Okay. So without further ado, I will wish you adieu. I wish you, in case I don't see you until next year, have wonderful holidays if you're Christian. And I will have wonderful New Year's Eve. And be safe. Don't do anything stupid and lose a bunch of money. Take the opportunity to review your charts. Take your opportunity to do some training, review your stuff, sharpen your techniques, review your old charts. You should probably write a business plan for 2018. Like if you haven't taken any training courses, now would be a good time to sharpen your saw, get some education. But use your time wisely, and then, of course, spend time with your loved ones. They probably miss you. Okay? And you need to have a strong foundation at home. You really do. I would like to thank you for the support and respect that you guys have shown me through 2018. You're important to me. This hour together is important to me, and I treat it as such. Sometimes I have to go to great lengths to even do it, but I do it. Sometimes I'm in an airport. I've done coaching for you guys through hurricanes, through typhoons, through earthquakes, through thunderstorms, through hailstorms. Like all these things have happened. I do these even when I'm sick. It's very, very rare that I don't do a webinar. And it's because you are important to me. And sometimes you're very patient with me, and I appreciate that. I overloaded myself this last 4 months. It was pretty crazy last 4 months. So, again, thank you for your patience with me. Thank you for your loyalty. Thank you for your respect. Thank you for being a client to Trader's Way. Thank you for being a subscriber at Forex.Today. All this stuff. I hope it was a great year for you, one way or the other. Thank you, John. I appreciate that. And John, on all that feedback, I hope there's no hard feelings and stuff. So I don't know yet. I haven't decided. I may pop in and do a couple more webinars between now and the end of the year. I don't know. I'm talking to two extremely wealthy gentlemen that I may have to go meet on various things. I might have to fly out to Vegas for dinner. I might have to fly out to the Caribbean for lunch. Might have to go to Germany. And if, of course, I do any of these trips, my wife's going to kill me. But somewhere in there, I might have to do 2 or 3 trips. So I don't know when or where. So, but if I'm home, I might do another webinar. Okay? That kind of stuff. If I can, I will. So if you're a subscriber, you will be updated. If you're not a subscriber, you won't be updated. So anyways, I like to end the same way every day. I think it's important. We don't say it enough, but peace on earth. Yeah, and of course, I didn't want that either, right, John? Yeah, right? That's not what I meant, and I hope you believe that. Okay? So anyways, peace on earth. May the pips be with you. May your profits be above average. Peace on earth. I mean, seriously, right? Let's have some peace. Life's complicated enough, right? So let's start with some peace on earth. May the pips be with you. May your profits be above average. And I will see you again soon. Cheers.